This is David Frost, mystrategicforecast.com. Today we're going to take a look at, can the S&P 500 move higher? Let's take a look to see what the charts are saying right now. So here what we have is an interesting chart. I first want to take a look at a long-term chart, a monthly chart of the S&P that dates back to the 2009 low in March of 2009. So you can see here this purple line I drew is a trend line. Now one thing we have to keep in mind when looking at trend lines is we don't draw the trend lines to determine what we think the market's going to do. Trend lines are drawn by the market so that we can interpret what the market is doing. So we follow the trend lines that the market draws for us. The market tells us what it's going to do most of the time. So I took a low, a closing low from 2009, March of 2009, and I drew a trend line through the lows in 2010 all the way up to where we are today. And what you'll notice is that in 2010, the market hit this trend line, bounced up, moved up higher, broke the trend line in 2011, okay? And then it tried to recapture the trend line in 2012, and it's been tracking upward ever since. It hit it on an intraday basis this year, earlier this year, okay? And then it continued up higher again. And where we are today is where essentially the closing high, or I'm sorry, the closing number today or this month so far is right on that trend line. So what I would say is that the market thinks this trend line is important. So what I just wanted to point out is that there's no reason we can't go higher, but I would say that hugging this trend line is a higher probability than breaching the trend line. Eventually, we may have a throw over to this trend line up here somewhere by 1 or 2%, but at the end of the day, this trend line is going to throw the market backwards, but most likely we won't see anything material until next year. So let's just take a look at a daily chart and see where we are right now. We had a little bit of a down day, but not much. I think this may be the turning point that I spoke about last week. And if so, we can look to first level of support would be the 50 moving average right here, which is this red trend line. And then the second level of support would be the 50 moving average, which is the blue line. Do we get down to the 200 moving average, which is the black line? I don't think so. Not on this move. I think that this 175 area here on the SPY, I think that what this will do is act as pretty good support. We may come down and test this level here, which is the 172 area. Much more than that, I don't see it. Maybe intraday, get down to 170. I think that's a buying opportunity. We'll see what happens. Anyway, that's the thoughts for today. We'll see where this market takes us throughout the week and continue with the updates. This is David Frost, mystrategicforecast.com.